Welcome back. You're watching us here on Halftime Report, doing well for the market itself. Now, Puneet Chhatwal, who's the MD and CEO of Indian Hotels, joins us from the 21st Motilal Oswal Annual Global Investor Conference. Our discussion will be focused on the important following points. The impact of the GST rate changes on the hotels business, the industry that is, the impact of weather conditions on occupancy in the second quarter, and the outlook on overall growth for the sector itself. Mr. Chhatwal joining us from the conference. Thanks a lot, Mr. Chhatwal, for joining in. You've promised and you've delivered, and the share price has, shown that in terms of the kind of move that we've seen as well. Now, the next trigger that everyone's waiting for is the GST rate changes. From a hospitality sector on the whole, I'd like your thoughts on, what the impact of this could be, because it's with or without the input tax credit. That could be a big game changer, right? Because 7,500, below 7,500 is where a lot of the rooms, the mass-priced rooms are. If it goes without ITC, will that make a change in terms of the profitability and earnings of hotel?
Absolutely, and I think that 7,500 ceiling was created 8 years ago. It's not been even adjusted for inflation. So I think given that the sector is the highest multiplicator of jobs, it is in the best interest of the nation to change that ceiling and bring it to the 5% bracket. So it's not an unreasonable request from our side. And I think, let's see, time will tell if that change happens or not. But should that happen, yes, it will be extremely positive.
What is the industry's ask as of now? Because what we gather from our sources, what TIMSI has been picking up, is that rooms sub 7,500 will move from 12% with input tax credit to 5% without input tax credit. Will the industry be fine with that?
I think so. I think why not? It'll be more transparent, and also it will put especially the restaurants in a lot of hotels on par with the restaurants which are outside the hotels.
Okay. Mr. Chhatwal, hi, welcome to the show. This is Ekta. Specifically, how would it impact your business if in case this GST change does come through?
Let's not just look at GST. I know that change is going to happen very soon. But generally speaking, hospitality is very highly taxed with very little incentives. Any kind of change in the tax structure, any kind of change in the status, whether you get infrastructure status or you get industry status in the state level, or you get a GST realignment or adjustment, all that is supposed to be positive. And we are looking forward to that. Some of that is already in motion, especially the 50 new destinations announced by the Honorable Finance Minister in her budget speech to be developed in mission mode. So I think there is a lot happening, a lot of positive situation is there for the sector, and that's why the sector has grown very well on the domestic front.
Absolutely, Mr. Chhatwal. Good afternoon. Sir, what we also want to understand is that in the recent times, obviously, you've increased your presence or come into that mid-scale size as well, right, by acquiring some stake in Clark's Hotel. Is that the strategy maybe the company will focus on going forward? And if you could highlight some targets coming in for FY26 for Ginger, Cumin, what are we watching out there?
We have clearly articulated in our strategy, which is called Accelerate 2030, that we'll have 700 hotels by then, of which minimum 500 will be in operation. And the majority of the growth will come through the mid-scale and other newer brands and upscale like the Gateway. And Ginger is very well positioned now to get to a portfolio of 250 hotels in 12 to 18 months' time. And the presence of Ginger as a mid-scale product would be relevant in all the district capitals of India. So I think that positioning with the latest acquisition that we have done has happened. Now the other brands will help the growth. But one thing which is clear is that the backbone of the company was, is, and the focus will never be off Taj. Taj is really the most important brand that we have. And it's not just the crown jewel of our group, but also of the nation. So Taj will continue to grow, and we have some very exciting new openings happening with the Taj. Two happening in Bhutan in the next couple of months, and another one in Udaipur, and ultimately the Taj in Frankfurt in Germany, our first foray into continental Europe. So a lot of exciting news on the Taj front. Ginger only on domestic front, very relevant and in line with the growth of the middle income group in India to address their needs and wants, which could be a population equal to 500 or 600 million in 5 years from now.
Okay, Mr. Chhatwal, it sounds extremely tempting what you've laid out in terms of the Taj plans and the hotels that you all are coming up with. But just on Ginger specifically, what is the growth rate that you all are anticipating within that mid-market segment? And you have targeted revenue of around 1,000 crores within that segment, as well as a EBITDA of around 350 crores. When do you expect to achieve that by?
See, we are already at 850 to 900 crores in revenue with an EBITDA of 350. But more interestingly, if you look back 5 years ago, the total revenue of Ginger was lower than the EBITDA. That's how we presented it at the time of the Clark's press presentation. We were around 220 or 240 crores of the total top line of Ginger. So that has significantly evolved, and I think this brand will scale up rapidly as it has done. 2018, it was a portfolio of 35 hotels, and as I just now mentioned, it could be 250 by next 12-14 months. So that's a significant scaling up, but that's also needed. So in a mid-market brand, scale is absolutely essential for brand awareness, profitability, as well as getting those dots on the map in terms of keeping the customer within your brand. So we are very pleased with the growth of Ginger as it has happened.
Take that point. In the very recent past, the first quarter obviously was impacted by some of the geopolitical disruptions, and you had stated that out in your first quarter as well. But the second quarter as well, over the last 2 weeks or 3 weeks, there has been incessant rains, a lot of flooding, a lot of damages around the country as well. Our heart goes out. From a business standpoint, has there seen some cancellations? Have there been any disruptions?
Absolutely, there have been cancellations, there have been disruptions. As we speak, Mumbai has a lot of that movement which is happening since a few days and is expected to last for a few more days. The rains have created traffic chaos in many parts of the country, including in the national capital. So I think those challenges are there, and it's actually not good for the people. As you said yourself, our heart reaches out to anybody who's suffering. But at the same time, all kinds of headwinds coming in the way of this sector is the best test of the resilience of the sector. Does it bounce back from every low? The answer is yes. Did it bounce back after Pahalgam attack? Yes. Is Kashmir getting to see more and more people going there? The answer is yes. Did it bounce back after Operation Sindoor, where 50 plus airports were shut down? The answer is yes. The only problem is those 7, 8, 10 days that go away, they cannot come back. But having said that, we still maintain our guidance of a double-digit growth for the current financial year.
All right, and a final question to you. On the one hand, any sort of policy push could do extremely well for the hospitality industry. You are a high employment sector. You've been asking the government to increase the impetus on tourism and, give you better status, etc. as well. But one faction believes that luxury should be charged higher prices, and that is something that is worrying the street. Is there a possibility that while, GST for hotels which are under 7,500 would be capped at about 5%, but higher rates for some of your crown jewel properties as well could come by, and could that be a deterrent from, say, 28% if goes up to a higher level, 40%?
I would not like to speculate on the tax point. I think we have been in a good space in the last few years, the sector has benefited from the spends in infrastructure development, whether it's highways or it's train stations or it's airports. I expect the trend to continue. It will be counterproductive to tax it more or higher. But should that be the case, again, the resilience factor would come in. I think luxury is less sensitive to price, but I think if we have to stay competitive within Asia and especially within Southeast Asia, we are already taxed the highest. There is no other country which pays 18% on upscale, upper upscale or luxury when compared to India.
Okay. All right, Mr. Chhatwal. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Indian Hotels maintaining its double-digit growth estimate or guidance, and also estimating that Ginger Hotels should probably hit that 1,000 crore revenue mark soon enough. On that note, we'll take a break with the news that the Bank Nifty is in fact slipped into the red, so just about lower by around 12 odd points. Do watch out for that. And additionally, remember to tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.